Hey folks, welcome back to the channel. Just coming at you today with a short video. Whew, what about that market? Alright, let's start off by saying that I never have a reason to panic, and really neither should you. So this isn't the end of the stock market. It isn't the beginning of an economic meltdown. It's just the end of the beginning of a long period of uncertainty. Now we have some certain idea of tariff policy, but we don't know what the impact of tariffs is actually going to be over the next couple of months. Other than that, I can tell you prices will rise. And let me explain what I mean by that, how we don't know how these tariffs are really going to play out. We live in a globally integrated manufacturing supply chain, a global economy based on trade that the United States has spent decades putting together. So many times in this globally integrated manufacturing supply chain, high-ticket items are often manufactured across several countries before they reach their final sale location. Let's take trucks, for instance, just Ford. Ford does not produce its own chips or boards, so they import these from China. These chips are assembled and put onto circuit boards at factories in the US, and then let's say that circuit board, along with a bunch of other US and Canadian-made engine parts, is exported to the Mexico hybrid engine factory in Chihuahua for assembly. Then that engine goes to Hermosillo, Mexico, where it's dropped into a new Ford Maverick. After that, the new Ford Maverick is imported into the United States. So how many times will the parts on this vehicle be subject to tariffs? Well, at least once, when those fab parts come from China and Canada for assembly in the US. And again, when those parts are exported to Mexico because of retaliatory tariffs. And maybe a third time when the assembled truck is imported back into the US. Now, we had a trade deal between the US, Canada, and Mexico, the USMCA, which was negotiated and signed by this president. That deal has been blown up in the last 3 months, and now producers and suppliers no longer have any idea what to expect in terms of costs. Well, none of us are going to know for a while. Everything is actually just a guess. It's probably going to take at least 2 quarters for the consequences of these extreme actions to be fully priced into assets like stocks and even real estate. It's only going to be when quarterly results for companies that engage in this type of manufacturing are reported that we're actually going to be able to see the impact on the economy well enough for the market to be able to price stocks accordingly. So essentially, don't trust the daily movements of markets to tell the truth about the health of the economy as a whole anytime soon. The Fed is also not going to struggle with direction like a lot of people think, or like the media is suggesting. They're going to stick to their mission of using monetary policy to control inflation and to encourage full employment. That mission is going to be at odds with trade and fiscal policy from the White House, and we don't know how that's going to play out. So my guess, and it's just a guess, is that we're going to see a lot of renegotiation of trade agreements. My guess, and it's just a guess, is that we are going to see a lot of renegotiation of trade agreements with the rest of the world, and that everyone is likely to take a harder line with the US than they have in the past, because they simply have a lot less to risk than they did in the past. Largely because the trade arguments made by this administration, while not entirely BS, are mostly BS. The United States makes up 5% of global population and 25% of global GDP. If the rest of the world is ripping us off, as folks claim they are doing, they're doing a really crappy job of it. Because of the lack of trust in the consistency of U.S. trade policy since 2018, many of our international partners have diversified their economic base, with China in particular being an extreme case of this. They now only have 7% of their imports coming from the United States. Because we mostly exported agricultural goods to them, they were able to source those from other markets, mostly Brazil. It really isn't unreasonable that Brazil ends up being a huge winner in this trade war. They have the ability to replace most U.S. exports to China, and I would not be surprised to see significant economic growth in Brazil. That partnership with Brazil means that the U.S. has a lot less leverage in negotiations. China is also going to go to our former allies and trading partners and strike free trade agreements. They are dangling BYD cars in front of Canada again after canceling plans last November to enter the US market. And with Tesla's tension with Canada, I kind of see that happening. The bottom line is that this policy isolates America from the rest of the world and incentivizes all other countries to trade with each other instead of the United States. China is going to start moving in and striking free trade deals with everyone. Like, why wouldn't they? This is the perfect opportunity. Anyway, thank you very much for your time and have a nice day.